dun, 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 dun. Dun, 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 dun. Is the customer care
I'm back.
waiting?
That is basically how they do, bro. That
Yeah,
is the sound they
dun, dun.
make. I tell you, hang on for us. We'll be back in a minute.
Yeah. Okay, so uh first, right, you've understood the things I talked about on price, right? So
Yeah,
and the importance of the daily time frame analysis. And
yeah.
actually, making analysis on the daily time frame could actually sound boring, right? Because a trader or a speculator will have to wait for a whole day, like to now know what happened, right? But trust me, like um one,
Bro, join me in eating egg, bro.
enjoy. But one, right? God did not create the world in a single day, right? And secondly, right? Um, we know that just like I said, that there is price for everything, which is no different than in the financial market as well, right? So that is it. So and moving on, uh we've met the first instance, right, of we've met the first instance. I don't know if you have got any more questions so that I can know if there's any
Mm,
confusions and
I feel like price actions, which is this movement of the candlesticks. Yeah. So, I feel like I do understand it in the sense that we're talking about what happens in the market by the day because it's a daily chart.
yeah,
This so analyzing the support and the resistance, and
yeah,
you also spoke about the psychological numbers on the side.
yeah.
So you're saying the market respects that and the market remembers that.
Of course, always.
So yeah, in this psychological area, yeah. So you said something like when it breaks below the normal support, yeah, that is sometimes you sell. That is the
So
if then statement.
yeah, always you have to always see that as it is.
Yeah.
If it does, then I do. If it does, then I do.
Mm,
Yeah.
that makes sense. That sounded
Yeah.
well.
Yeah. If
Yeah.
it does, then I do. And if it doesn't, then I
You carry on.
yeah, you just stay. Right. So that is just it. If
Yeah.
it does, then I do. If it does, then I do. You understand? If it does, then I do.
Yeah. So I've got a question here. So
Yeah.
in the day, what in this technical analysis, what influences the movement? Because you said they put the chart on. Or how did he
Yeah.
say? Did he say like they put the charts on and all these things? Yeah. So what influences the market price in technical analysis? Is it the history? What influences the market price? And where does it become profitable for a trader? Because if you study the candlesticks and you know it gets to this place, it gets to that place. So since you're a technical analyst, not a fundamental one, yeah. How do you know what influences the market and when to place a trade?
Okay. Yeah, great question. So first, right?
Yeah.
for every buyer, there is a seller,
Yeah.
right? If we go to the mall to buy something, we are buying, and the mall is the
Mm-hmm.
seller, right?
Mm-hmm.
So the mall is selling you that pen, which means you are the buyer and there is a seller, right? So first, we have to know that for every buyer, right? If we are just that is something that it is on the market, or right? If we are buying, there is someone that we are not seeing that is taking the opposite of our trade. So first philosophy, I would want you to know that you're not the only person that is involved.
Mm-hmm.
So don't see yourself as you are the buyer and the seller. I have learned that from Jesse Livermore, right? So for every buying
So
and for every
there's someone
selling,
on the side
there,
who's buying for
there,
you when you're selling.
exactly. There is someone. Sometimes the broker will have to take the opposite of your trade. That is
Yeah.
why the broker can actually make money even when you're losing, because sometimes they could take the opposite of your trade, and when you lose money, they make money too, right?
Yeah.
So for for the for the whole interactions between the buyers and the sellers, all right? The buyer
Yeah.
and the seller can be an institution, like buying and selling to another institution, something like that. So it is not only limited to like small number of buyers and sellers. The buyers and sellers could be any institutions, could be any big financial firm, right? So it is the actions of these market participants that swing prices, right? So now, what makes it a very good environment
I got a
for,
question before I forget.
okay,
Yeah. What makes a seller sell? To me, I feel like what could make a seller sell could be, let's say, financial reason, emotional reason, um, news. Yeah.
yeah,
So
yeah.
so when they sell, I feel like I'm answering my question myself
No, no,
before.
no, continue. I'm going to
Yeah.
continue. I'm going to find the
So
answer to what you.
yeah. So I feel like when what makes them sell, because if the market is looking good, I feel like a lot of people will want to hold their trade and just a little percentage of people will want to sell. So what
Yeah.
makes the seller sell and what makes the market keep on running or coming down if it's just technical analysis? Because if I'm just watching a candle and I'm seeing it go up, down, it's like a bet that this is gonna go. But if I have a short information as to why I think I should invest in a trade, yeah, I'll be very satisfied if I see the candle going up and down, up and down, up and down.
Yeah.
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 So I want to know what gives the us the confidence in the market to sit when people are selling and we were just watching the candlesticks without checking the news to know why people are selling or why people are staying. Yeah.
Okay. Okay. Great question. Uh, so and now I'll hit the question. Like I'll hit it right. So I'll answer all the whole questions. So first, right, I want you to know that the market, right, always and we always travel. If it's coming down here, just know it's traveling, right? It's basically traveling, right?
Yeah.
Yeah. So from here to here is traveling, right? So the market always travels through the area of the least resistance.
Yeah.
What I mean is that, first, to answer your questions, the market always travels through faster through the area of the least resistance. And a trader always has to trade through the area of the least resistance. The resistance, what I mean is the area of the least resistance is, let's say that, for instance, that we want to sell. If we wish to
Yeah.
sell and there are obstructions, there are obstructions, couple of support below, you would price wouldn't go down as much as if there were like three places up, right? So now logically there are more restrictions below than it is above.
Okay.
So if there are more restrictions below, right, it is not going to go down, it is going to go up, because
What is the restrictions?
the restrictions are prices, support and or there are supports. The restrictions are supports. So if there are all couple of support prices that has held support previously in the past, the market is not going to come there. It is going to hold price logically, because it is not, it is, there are lots of obstructions there.
The market, which is the people.
The people, yeah. So the people, yeah. If and it is the people that is in the market. So yeah, the people. So they all have the same they all have like a unified this thing, that there are lots of, naturally too, it is going to hold, because it is it is going to, like, they are going to support, just like we talked about on Nasdaq. They are still going to come and support prices at any specific prices, right? So if let's say a big firm has been supporting price at, let's say for instance, at this 107, right? And uh um there are sort of other big firms also that has been also putting their money at this price to hold price, right? And there are a couple of other resist or supports that are below this price as well,
Yeah.
right? These prices are going to hold support, like these prices are going to hold,
Okay.
right? So price travels through the area of the least resistance. That is that is what you have to. Okay, let me give you an example, right? So let's during the IPO, this was the IPO, price went up, right? And um let's
Wait,
say,
can I ask a question though? Yeah.
yeah.
I feel like what I'm trying to know is, how do you know when to hold on to a trade
Yeah,
and when to sell if you're watching the daily stick? I know we explained, like, if it goes below the support
yeah,
of, you can sell. That's the if then.
yeah,
Then
yeah,
if it's going above the resistance, that you stay
yeah,
still.
yeah, yeah.
Yeah. So, like, before you get into the market, because we're watching candlesticks,
Yes.
what is the analysis you do? What are the analysis you do?
The
Because you
analysis
have
you
to, yeah, it doesn't have to be like we're guessing. It has to be
yes,
like
yeah,
we're certain. And if we have
yes,
to be certain, we need information, we need facts
yes,
that can give
yes,
us a potential. We need to be like 90% sure. Let me say
yes,
90% sure that we're going to come out of this trade profitable. Because without
yes,
information, we can't do guesses. Guesses is gambling.
yes,
And
correct.
that is where money can be lost. Yeah. So what
Yes.
is the certainty watching the candle? What gives us the certainty?
So Great question as well, and still the same question, and still the same answer that I will be arriving to as well. So, first is, right, there is what is called imbalances, all right?
Yeah.
So, imbalances is sort of like market inefficiency, right? So, and when I start, or when we start having the classes of Dow theory, we are going to talk about the concept of Dow theory, right? So one is imbalance. So an imbalance is pretty much when there is a big block in the terms of money, where that travels like something like this, a big block, that's a big buying
Yeah.
or a selling block. You understand? Like in an action that is somewhat this type of candlestick, right? If you see this type of candlesticks, it basically means it is an institutional move, right? This type of candles as well, like this type of big
Mm. Yeah,
candlestick,
it's
right?
massive, bro. It's an
That is,
institutional move. Yeah,
yeah.
you can
So
tell. You can
yeah.
tell.
So these are institutional move. So 95% out of 100% or 96% out of 100%. When you are done making your technical analysis, all right, you are going to arrive at this type of environment. You are going to
Yeah.
arrive at this type of environment, this type of big institutional candles. And when you arrive there, you already know that price travels faster when it comes to that side. Let's say
Mm.
let's say like this type of movement occurred here, right? If price comes back at that opposite price, it is going to travel as fast as it did on the opposite side. So 95 to 96% of the time, when you are done eliminating all the obstructions by using your accurate support and resistances, where you are going to arrive is at an imbalance. So you are sure of your setup, and then you are going to execute your trade at that imbalance. That is the only place where you are restricted to trade. That is it. So first, you have to get your
Okay.
support and resistance prices very, very correctly. That is it.
Okay. All right. I get it.
Yeah. So that is it. So you have to always pay attention. You have to always pay attention and sort of make sure that your prices, your uh some technical traders call this accurate labeling, right, or a labeling system, right? So you have to sort of mark your prices, mark your support and resistances, because anyone can put up support and resistances, right? But you have to follow the accurate way of trading support and resistance, right? Yeah, so that is it. So when you are done eliminating all the obstructions, then you would know that the area you now trade through the area of the least resistance. So the area of the least resistance is going to be an imbalance automatically.
Imbalance is the institutional trade.
Yeah, yeah. So when you are done eliminating the obstructions in the form of support or resistances, you are automatically going to arrive at an imbalance.
What are the obstructions you're eliminating?
The obstructions you are eliminating are the supports or the resistances. Let's say, so remember what I was saying about the daily,
Yeah.
right? Okay. Let me check if we can go to another asset so that we could use another
Wait,
asset.
if the price here on this one, yeah. Mm.
Yeah.
So if the price comes down like to 1 1, let's say it comes down to 116.
116. Yeah.
So 1116.
Yeah.
And you want to place a trade today. Yeah. So your trade will be like you open a trade at 116 and then let's say for example be taking profit at 118.
No,
Is that
you're
what
not
it
even.
is?
No, you're not. You won't on this type of instance, right? You will not even be
Yeah.
taking any trade, right? Because you want to. You're not for every day. If you're coming to make analysis, right? You're not making analysis so that you're going to trade that day, right? You're making analysis so that you could see if there is an opportunity for you to trade.
Mm,
So everything just boils down to your definition of opportunity, right?
yeah.
So if the market does not create an opportunity, that means there is no trade, right? So like if I am coming to make an analysis on this day, right? I already know if I am using and I'm using price as support and as resistances. And if I am putting into consideration what I have talked about on prices, right? I am going to know that at this price, at the high of that price, naturally and logically, right? If we should be going up, right? The market should be breaking the prices of yesterday. That means I will be ready to buy. That means the price is going up. So the market, I won't be buying if the price is down. I want to be buying if the price is up.
Yeah.
So for the most of it, I want the price of yesterday to break the price of today and start going up. But at least it will have to confirm it with another day that closes above the price of yesterday's high price close. Do you understand what I mean?
Before you place a trade on that.
Yeah. So now, for example, now I wouldn't be taking any trade today unless today's price, at the end of today, that I get a price, right, that closes above first, right? There is another resistance that is sticking out though that I would wish to spot out at this price on this, sorry, on this green candle, right? At just that price. So I'm just going to label it. When we start getting the our so right, this is the price is at 118.60 psychological number. You could see the price, that is where the price stopped at that day. So and for every labeling that you have to do, it has to be on the green because the market is always advancing, right? So
Yeah.
where if you want to mark your support and your resistances, you mark it on the prices on the green candles, right? So for if I wouldn't be taking any trade today, if I am to take any trade whatsoever, right? What I am going to do, I am going to wait for today, at the end of today, right?
Yeah.
If the price breaks above at this price, this is the only time I am going to take a trade.
Mm. If
So
it goes
basically,
above that red line.
yes, yes, and closes above it. That means I will need it to break the price of yesterday and the price of Thursday last week for me to know that yes, the price wants to continue advancing
It wants to
above.
go bullish. Yeah.
Yeah, yeah.
So if it's coming downwards, like if it's coming bearish, you don't take a trade.
No, if it's coming bearish, that means I won't be taking any trade, right? So what it means is that if I am going to implement this if-then statement, so what I'm going to
Yeah.
do, right, is if price breaks above 118.60, then I buy. If price breaks holds, then I will
Yeah.
look for bearish signs, which means previous selling. Do you understand?
Say that again.
Now, what I have to say, after what I have to do, right, is after having my prices, one, my resist. Oh, sorry, this is supposed to be the R2, the resistance to not one, because first we've had the one, right, and then this is the
Yeah,
two,
there.
right? So I wouldn't be the one. I wouldn't be the one breaking price. All right. So I'll have to live by the commandment of if price breaks above 118.60, then I buy. And not and it is not just spiking it. Oh. It is not just spiking it. It will have to like break it for a whole today. We'll have to break it completely and close above it, right? Which means that the price of today have completely broken the price of the previous days.
Okay. So before you say you're gonna get on the trade.
Yes, exactly.
Okay. I get it. I get it. Then if it's breaking, if it's not going up, if it's coming down, you're not placing the trade.
Yes, exactly. So I sit on my hands, no trade.
Okay, I get it.
Right.
I
So that is
understand it.
basically,
Yeah.
yeah. So that is it. So, so for everything that we're doing, we are looking at the prices. We're looking at the prices. We are implementing our if-then statements.
Yeah.
Right. So that is the thing for the support and the resistance. So I think we'll be closing on the next 2 minutes so that we could get a rest for our brain to sort of calm down, and then we'll
Calm
continue
down.
in the afternoon session.
Yeah.
I don't know if you've got any other question. And remember that for the labeling, right, all your labelings will always have to be on the green.
Okay.
Yeah, it will always have to be on the green, and your analysis would always have to be on the daily. Your analysis will always be on the
Yeah.
daily. What you're interacting with will be on the high. We, as technical traders, right? We are blessed. We are blessed because for every day we have the evidence of how far price traveled and how low price traveled. And with those two evidences, we can make analysis.
Yeah. So I got a question.
Yeah,
Let's say you place a trade
yeah,
after um it broke the resistance two. No, it broke resistance one. It's going
yeah.
up now. Yeah. What is your take profit? Is your take profit or is your stop loss going to be on resistance one? And what will your take profits be on?
Okay, first, I wouldn't be taking a trade if it just breaks resistance one. It has to break resistance one and resistance two
Oh, okay.
first.
I meant, yeah, I should have said resistance two.
Okay, great. So it has to break resistance two. So now, when it breaks resistance two, right, the next thing which could
Yeah.
actually wait for it is naturally when when the market breaks a price, what does it do? It naturally pulls back. That's 12 p.m. So when price breaks a support or a resistance, it naturally always pulls back.
Yeah.
So wait for a pullback, that is resistance has become a support. All right. So and it helps to confirm the strength of the trend.
Absolutely.
Right. So we expect the resistance to hold as a support. right? So, and we expect to now see signs to now continue to now start buying, right? So our entry mechanism, our entry method is the supply and demand. So the entry method, right? It's supply and demand. That is what we
Yeah.
use for entry executions, right? So when we get into the entry method, we will talk about the supply and demand, right? We will have our target, all right, which for everything that we do, it is not static, right? So for every, it is not static. Our risk to reward is not static. So there, we don't have an exact point where we are going to have a take profit or an exact place where we are going to have our stop loss, right? So that is
Okay.
it. And nothing that we do is static, right? And if you look below here, you see a yellow line. You see a yellow somewhere. Right? Can you see it?
Yeah. At the
Yeah,
bottom.
so yeah, at the bottom. So this is an average true range. This is average true range that measures the volatility of the market, right? So with the calculation of
Yeah.
the average true range, right, we automatically get the data of where we are going to place our stop loss. So we don't just place stop loss or just we don't just place targets as we don't just place stop loss or target at any random numbers, right? It is based on the volatility of the market. So everything is data, right? So we just don't like do things like that, something like that. So when we get to the entry methods, then we'll talk about this. So, but on the whole strategy and on the whole analysis, it is support and resistances. It is like understanding how to correctly analyze the market, right? So, but first, let me quickly, do you understand what I mean? Did I answer your question?
Yeah.
Okay, yeah. So we'll still get into those entry methods, right? So, but at some points, right, there are some things that could actually happen on this type of scenarios. Let's say that on this day, right, if the market breaks, right, we are implementing our if-then statement. There are instances whereby, remember, for a candlestick has an open and a close. All right.
Yeah.
So, and let's say that at the close of the candle, right, we got it closed something like that. Let me exit this, let me expand this candle a little bit. And then I have this. So this is the close of the candle, right? So this is the open of the candle. This is the open of the candle, right? This is the open of this candle. This is the low of the
Yeah.
candle, and this is the high of the candle, and this is the close of the candle. So I would want you to know that there is what it's called on support and resistances as well. There is what is called range expansion. Expansion. So let me move it then up. No. So a range expansion, right, is when we have broken support and resistance, right? We have broken these prices. We have broken 1.1, we have broken 118.08, right? And we
Yeah.
have broken, price has broken, not we, price, have,
118.60.
yes, right? But we still got the next day, right? We still got price leaving us with this level here, right? So what do we do if we are coming in the next day, like this is Thursday, this is Thursday, right? If we are coming in the next day, like let's say on Friday, we are still going
Yeah.
to pay attention to this resistance here. So now this becomes the resistance. So this is a range expansion. The resistance did not just break, it just expanded.
Yeah.
So for every breakout, like for every break of a support or resistances, right, you want the candle that will break outside of that to be something like this, without, or even with just a little
Stick at the top.
stick, just a little stick at the top, like just to confirm that this is actually strong, and something like that, something like this.
Yeah.
And not just printing another a candle that has a resistance like that.
Yeah.
So this confirms strength. Okay, yeah, we can just keep on buying, but this is just an expansion that this resistance at this price, that this price could actually still hold resistance. That is what it means.
Yeah, because the gap is a bit much.
Yeah, exactly. The gap is a bit
We need,
much.
yeah. We need a
So yeah,
small one like the other candle.
exactly. And then this low now could actually be support one. This
So
year
is that
now.
why you stay in the trade still? If the resistance, the candle at the top is small, you stay in the trade still.
No, if the candle is like this, then that means, yeah, I'll now be hoping for a clear pullback. That is resistance
Oh.
becoming support, then I'll start buying. But if it is on something like this, I will categorically wait for the next day to completely break above that resistance,
Mm.
to break above this price as a resistance. At this, as a candle like this, you won't be trying to take another trade again. Remember, what you do as a technical trader, what you do is individual price analysis, individual candle price analysis. That's what you do. It is called tape reading, right? So you have to pay attention to the prices and how far the print of the candle has been. You understand what I mean?
Yeah.
Yeah.
Let's take a break and come back.
All right, let's take a break.
Let fresh air.
All
Let
right, all right.
fresh air enter the brain and
Yeah, I
let's eat
agree.
something and then we come back.
All
There
right.
then.
All right, all right, great.
I got a question. If we come back, I've got a question.
Okay, great, great.